Steinhoff is a holding company invested predominantly in the household goods and diversified related industries with significant interests in Europe and Southern Africa. The company has a market cap of 71.2 billion rand, price to earnings ratio 9.8 and a dividend yield of 2.1%. I think, Paul, what's really interesting here is Conforama and that it's made it second only to IKEA in Europe from a furniture perspective.
And look at that chart. I mean, look at it there, Bronwyn. I mean, it sort of ambles around here in the mid-20s, and literally in the last 3 months or so, it goes right up to 40 Rand a share. Happy to say we've been in this position, and we took it about here in the middle, so we didn't exactly get lucky. We just got right, you could say, in respect to the position.
Do we have a relatively big position in Steinhoff?
It is, but I'd like it to be a bit larger, but we shall return to that thought a little bit later in the show.
Okay, what can go wrong here? I mean, this is a pretty heady share price.
Well, let's go back and talk about what Steinhoff is. Really what it is, it's the house that Marcus Jooste built. He was an enterprising young accountant who got involved with a couple of businesses in the sort of greater manufacturing area north of Pretoria. He and a friend basically took over the Goma Goma business, which was a furniture manufacturing operation. It had failed and they had an opportunity to buy it because it was over the road, literally. That was the story. Over the years, though, he kind of builds it up. Then he befriends Bruno Steinhoff, who's a German furniture entrepreneur, and another guy called Klaus Dawn, also German, but a big fan of South Africa's.
You've done your reading, your homework on this
What
one.
they do over the forthcoming years is just hoover up a whole bunch of businesses that are broadly in the furniture manufacturing, logistics, supply and distribution business. As you say, the clincher around here in the middle is Conforama. Because what it is, Conforama is a European-based furniture reseller. They kind of operate those big, colorful warehouse-type stores in France, Spain and Italy. Nobody wanted it. Why? Because it was kind of an era in the UK and in Europe with the 2008 crash where, everybody assumed...
Europe was in the doldrums.
Absolutely.
And you couldn't say a good word about the territory.
But what they've bought there effectively is a bunch of relationships, a bunch of physical buildings in and around France. Now remember, even if you don't own a store on the Champs-Élysées, next door to Richemont's or Cartier's, French retail assets are very hard to replicate. You can't just build a superstore in the middle of the French countryside. So that has substantial value. And what we're beginning to see, as you know, is a turnaround in European economic...
Well, that's exactly. This all hinges, this stock hinges on Europe and the turnaround in that territory.
Because the basic model is they manufacture furniture in Eastern Europe mostly, in Poland and these sorts of places, where labor is cheap and the raw materials, the foam, the plywood and the carpeting material or whatever it is, the upholstery material, and they move it into these markets. They also do a lot of sourcing from Asia. I mean, that's self-evident. Televisions, flat screen TVs, has been the #1 furniture item for selling for decades.
So basically it's the whole basket of goods when it comes to your home.
It is. But we should not forget sight of the South African assets because remember they own 50% of JD Group, which we'll talk about in a minute, which is all of that stuff. And then they took all of their other assets, which were things like Unitrans and CAP and all those other things, and put those into that listed industrial holding company called CAP, which they own about 60% of.
So it's quite complicated, Paul. I mean, this is not an easy structure, and I think that has been one of the negatives from an analyst perspective, is saying that the structure is so complicated that it's difficult to get one's head around.
Look,
I'm battling to get my head around.
Marcus Jooste is a past master at this. He's a very talented accountant. His balance sheets always look exceedingly complicated. He's not scared of a deal, and he's not scared of a financial structure.
Certainly not scared of a deal.
And he's not scared of a bank loan either, let's face it. So what he does is he kind of puts these things together, and before you know where you've got what you've got, he's on to the next transaction. We know that they're planning to buy something else in Austria. Remember this thing called Kickerlane or something, which is again a sort of furniture competitor like IKEA. And there's talk that they're going to buy something in Germany. And we're pretty...
So there's no stopping Marcus Jooste, is what you're saying?
No stopping him, and I suspect what he's going to do here is really always be pushing the envelope. Is that a problem? Yes, because potentially in 2008, 2009, if you're pushing the envelope and you get hit by a firestorm, then things look bad. But what we're seeing here is that he's pushed the envelope and now we're enjoying an economic recovery.
Would anybody in their right mind buy Steinhoff at current levels? Surely all the good price and all the good news and more is priced in there.
It's definitely attractive for a couple of reasons. First of all, the earnings are only now beginning to turn. And you understand that if you've got a fixed cost of maintaining a production line and a retail infrastructure, any additional sales drop straight to the bottom line. That's the first thing. Secondly, there's talk of restructuring their assets in Europe. So either a
And this
listing...
would be a good thing, you're saying?
Absolutely, because it would unlock the value and make it apparent to investors. So either a separate listing of the property holdings in the greater continental Europe, so they would take all of the property assets they own and put them into like a property unit trust or a property fund or a REIT. The other option is to take Conforama on its own and to float that off as a separate listing in Europe, and then to have Steinhoff at the top, which owns that as well. So all of those kinds of potential transactions.
I want to know one thing. Would it help to simplify the structure, the potential changes you are talking about? Anything there help to make it easier to understand?
Look, 2 years ago, we were dealing with the reorganization of the South African assets, and that really smuggled people's minds because they signed up a deal with Investec Asset Management and the PIC, and with the management shares, they had more than 50%. So they basically presented it as a fait accompli to the market. It involved a very complicated swap of CAP shares for JD Group shares. And nobody could understand why would you want to swap those, but it doesn't matter because they had it all stitched up. Some people say they should have paid a control premium for JD Group.
There's
They
one
didn't care
thing.
about that.
There's one thing we've got to talk about here, and that is that the premise on which, for instance, Buffett invests, and that is one of the key tenets is that you have to understand the stock. That may be why many people are staying away from Steinhoff.
Well, I don't know though. To be fair, it's not as though they are involved with rocketry or with complex genome
Which makes it
research
all
and
the
biochemistry.
But
They
then
are
you should be
making
able to
pieces of
understand
furniture.
it.
The stuff
Surely
they sell
then
in
you should be able to
Conforama
understand
is
it.
like cheap plywood put together, and the French people need new chairs because the old ones got worn out. So it's not as though the business itself is all that complex. It's just the way that they do it, the use of financial structures, the results themselves. So it's more operational and financial risk. But as I say, I don't see that being a
So
lasting.
you're giving Marcus Jooste a break on the complexity of his business here.
Well, you know, the guy sponsored student rugby in this country. He's a superhero. He's involved with the horse racing industry. He's one of South Africa's most colorful figures. He's done extremely well. They also incidentally own a piece of PSG. We haven't even mentioned that.
Well, that's obviously a good thing.
That's obviously a good thing. It's one of the relationships he brought along the way. It's a stake that is potentially realizable because it isn't necessarily core here.
And it puts him into the Stellenbosch network.
Exactly. He moved, in fact, from Stellenbosch. So he's a Pretoria guy that got accepted in Stellenbosch. That must tell you something.
Exactly.
When a
that
Pretoria
is a tall
boy
ask.
gets accepted into the Stellenbosch mafia, you've really made it. That's how you know.
Hot or not, Paul, on Steinhoff?
Yeah, I think even at the 40 Rand price, it's definitely still hot. Its earnings, we think, in 2014 are going to be substantially above the sort of 4 Rand a share sort of earnings level, and that makes it definitely cheap.
Well, we